What's going on, guys? Nick Dark here. This is going to be a Forex legal market lesson video on Japanese candlesticks. So it's going to be pretty much the basics of price action, how these candles form, time frame differences, and basically just how they open, how they close, the ranges that they have, and pretty much everything that encompasses what a Japanese candlestick is. Okay, so first we want to go over the absolute basics here, both bullish and bearish setups scenarios. So the bullish scenario here is opening price is right here at the low, and then close is always going to be above open, hence a bullish candle, right? So the closing price will always be above the opening price in a bullish setup. So the main thing you want to focus on here is open, high, lows, low, close. So OHLC is what you want to focus on. So we're looking for the opening price, the highest price, the lowest price, and then the closing price. So in this particular candle, whatever time frame this is, let's say it's a 1 hour or 4 hour, it doesn't matter. Now the opening price was here, and then the highest price was here, and then it pulled back a little bit, forming this wick. The lowest price was down here before it pushed back up, and this was the lowest, and it was represented as a wick. And then the close was right here. So open, high, low, close. So the opposite is true for the short scenario, the bearish setup here. The close will always be below the open, hence a bearish candle. Price action has dropped, the close will be below the open. So again, same thing here, open, high, low, close. Here's the open of price, here's the high, represented as a wick, because price action hit this high, then came back down, found the low, right, pulled back up a little bit, formed this wick, and then closed here. So this is the bearish example, this is the bullish example. So now we're gonna hop over to a real chart and kind of highlight certain scenarios for you. We're gonna do bullish ones first. Bullish ones we're going to highlight in green. Let's just go ahead and set this one up. I'm going to highlight all these in green and kind of break down exactly what's happening. Okay, so a good one here, a good bullish candle would be this one here. Nice big candle. We're going to zoom in right on this so we can see it very clearly. And again, this is just the basics, guys, just understanding of what this is, the open, high, low, close. Why these wicks are formed, because this was the highest price action reached before it pulled back, and so on. So let's go ahead and dissect this singular candle right here, and then throw some call outs on it. Okay, so this is the open. Open. We will make this green. So that's the opening price, right? This is the lowest point of price action. This wick at the bottom here. So this is the 4 hour. So within these 4 hours, price action opened here, it formed this low, price action fell a little bit, formed this low, then shot straight up, so it formed a wick, came all the way up here towards our high, which is right here. Right, formed this high, and then pulled back. This is the highest price action reached in this 4 hour time frame. Then it pulled back for the close right here. Close. Okay, so that's one setup. That's one bullish candle dissected here. Open, high, low, close. Okay, let's find one where it's a little more, some more wicks. Here's a good example right here. Where'd it go? There it is. Boom. Okay, so the open was right here. There's the open. Here's the high. So price action reached this point in this 4 hours as the highest point, then it pulled back, formed a wick. So that's the high. Here is the low. Right, and then here is the close. Okay, open, high, low. I'm sorry, the close is up here. This is the close. So again, this is the bullish candle. The close is always above the open, right? Okay, so let's go ahead, and I want to highlight a doji for you guys. So there are such things as neutral candles, even though it is still represented as bullish, like this example here. So this is more or less indecision candle. There's not there's no real clear direction, although the close is above the open. This, when the body is this small and the wicks are significantly larger, this is considered a neutral candle or an indecision candle. So this means there's no real clear direction because there's more fight on each side. So the wicks are longer, so there's a bigger battle going on. There's more buyers fighting sellers, more sellers fighting buyers, and they didn't really come to, there's no outcome in this 4 hours, right? So it's an indecision candle, or a neutral candle. And that's usually when you see the wicks are much, much longer than the body, and generally the body is pretty small. That's when you can, classify this as a neutral, or indecision candle. When you do see giant wicks on large body candles, that's usually news stuff. So like this right here could have been news related. Huge wick to the downside, right? And then the body is relatively decent size, medium size. But normally I want to find another real quick, maybe news spike or something. Maybe something like this, right? Huge indecision candle, giant fight had happened here. A lot of bulls stepped in, a lot of buyers stepped into the market. Sellers stepped in as well, pushed price action back down. So stuff like that. Big wick candles you want to watch out for, okay? Typically that is, indecision all around, and it's uncertainty is what that means when you see giant wicks, okay? So let's go ahead and just dissect this Doji candle here. So here is the open. Here is the high. Here is the low. And then of course here's the close. Oh, where'd the high go? Let's remark that. This is the high. And then this is the close. So again, guys, just another indecision candle. This is the open. This is the high. This is the low. This is the close. So the close and the open are very close to each other. And then the high and the low are much further away, and then they pulled back and formed these wicks. So just watch out for that. It's good to just understand what's happening here. You can clearly see there was a fight. You can classify this at the end of the 4 hours on the close that it is, there was uncertainty that happened. So there's no real clear direction until this candle had formed here. So, again, another example, open, high, low, close, just like we went over a couple times over here. This is a clear direction candle. Clearly the close was much higher than the open. This is a bullish candle, no arguing that whatsoever. There's minimal wicks on each side, good volume, good conviction. That's what you want to see in a nice healthy bullish candle. Okay, so I think we've done enough bullish candles. Let's go ahead and highlight some bearish examples. Let's just load this up for red. Okay, there we go. Let's find some bearish examples. Okay, so here's a nice bearish candle. Pretty much no wick to the downside. So I will show you what I mean by that in a second. So this was the open. Let's go and make this. That's the open. This is the low. This is the high. So the high is also the open. So there's no wick on this side. So the high is the open, and that just shows a lot of conviction that the sellers are definitely there. There's pretty much no fight from the buyers. They gave up at this point. Sellers just stepped in. The high was the open, and then you just saw price action drop. So this is the high. Okay, and then the close is right here. Very easy to see. The complete opposite of a bullish candle. Open, high, low, close. And there's a wick here because this was the lowest price action reached, and then pulled back a little bit and then closed right there within those 4 hours. Really great example. But yes, the high can be the open, the low can be the close. That's just the absence of wicks. You won't see any wicks in those scenarios. So here's actually one of them. Let me highlight this one for you. Right here. So the open is right there. Here is the high, so price action came up a little bit, formed this high within these 4 hours, then pushed back down. And then the close and the low are the same. So there's no wick to the downside. It closed at the lowest point of this candle in this time frame. And yeah, so there you go. No wick. Looks pretty good. So open, high, low, and close, one and the same here, and no wick to the downside. Okay, so that's, wicks really do tell you a story within each candle. There was a fight. Let's say in this candle here, there was a candle open. The buyers tried to step in, push price action a little higher. Sellers then stepped in, overpowering the bulls, overpowering the buyers, and then pushed price action way down, and then closed with no sign of the buyers in sight until the next set, next candle, the next 4 hours. And then you saw again a bullish example here. So those are two great examples. I want to find a doji for you guys. So let's do this one right here. Actually, this one's pretty good. So even though this is a bearish candle, it's still an indecision candle, and doesn't have much direction. But again, each candle has a story. There's something happening on each and every single candle. So here is the open. And again, this is consistent through all time frames, everything from the monthly to the 5-minute. This is exactly the same. Japanese candlesticks are always forming in the open, high, low, close, setup. And there's not going to be much difference between how these are setting up. You're going to have neutral candles, you're going to have clear bullish candles, you're going to have clear bearish candles, both with and without wicks. So you just need to understand why that's happening, how it's happening, and then you could understand where the general bias is for the market. So here's the open, here's the high, here is the low, and then here is the close. Okay, so real quick, open, high, low, close. The close and the open are very, very close to each other. The wicks are much larger than the body. This is classified as a neutral candle and decision candle, even though the close is below the open. So just showing you guys, this is a great example of how you can understand price action and how these candles are forming. Okay, so I think we've done some pretty good examples here, guys. This isn't a terribly complicated lesson. Just simply going over how Japanese candlesticks form, open, move and close. Okay, so again, here's a bullish example. The close is always above the open. Here's the high, open, low, or open, high, low, close, and then opposite is true for the short. For the short scenario, the bearish example, the close will always be below the open. So you have the open, the high, the low, and then the close. Okay, guys, this has been a Forex League market lesson video on Japanese candlesticks, and I will see you in the next one.